Stockholm, as spring bloomed across this famously progressive Scandinavian nation, dark economic clouds gathered. The latest GDP figures reveal a sobering slump in Swedish output, with the economy contracting 0.7% in April from the prior month. This disappointing downturn defied the expectations of economists, who had forecast modest growth of 0.2%. The timing is deeply disconcerting. After over a year of punishingly high interest rates aimed at containing inflation, the Swedish central bank, the Riksbank, had just begun rolling back its tightening policy in hopes of reviving the sputtering economy. Yet the anticipated beneficial effects have yet to materialize for embattled Swedish households and businesses. The development is partly explained by a decline in household consumption and somewhat weaker private production, explained Melker Loberg of Statistics Sweden with typical Nordic understatement. Translation: battered by elevated borrowing costs, the fabled Swedish consumer is retrenching. And the corporate sector is feeling the chill as well. For a nation that has long prided itself on its egalitarian social model and elevated living standards, this chastening economic reversal raises profound questions. How could Sweden, a bastion of Scandinavian pragmatism and prudence, find itself in such an uncomfortable predicament? The origins of the crisis reside, paradoxically, in Sweden's very success. In recent decades, the country wholeheartedly embraced the neoliberal economic model that has swept the globe, the Swedish people growing accustomed to abundant credit, rising asset prices, and buoyant consumerism. The pandemic temporarily disrupted this breezy upward trajectory, yet by late 2021, the economic overheating had resumed in earnest. Inflation, long a mere theoretical curiosity in this technocratic utopia, came roaring back. By early 2022, prices were spiking at a shocking 8% annual clip, among the highest rates in Europe. The once prudent Riksbank was caught flat-footed, launching a belated but brutal campaign of interest rate hikes that propelled its benchmark lending rate from 0% to a towering 3.5% within a year. Those escalating borrowing costs have now put the squeeze on the very foundation of Swedish prosperity, the highly leveraged households funding their enviable living standards through a surfeit of mortgage and consumer debt. With wages stagnant, many find themselves trapped in a vice, mortgage payments devouring their discretionary income. We used to be able to afford little luxuries, a nice dinner out, maybe a weekend getaway, laments Anna Johansson, a graphic designer raising 2 children alongside her husband Per, an IT specialist, outside Stockholm. But with our adjustable mortgage rate nearly tripling, those indulgences are gone. We're just trying to keep up with the bigger monthly nut while costs keep rising everywhere. The Johanssons' plight reflects a broader retrenchment gripping Sweden. While the Riksbank has now shifted to lowering rates, consumers and businesses remain understandably skittish about the future. The psychological scars of 2022's inflation trauma linger, breeding a climate of caution, if not outright pessimism. We got a bit drunk on easy money and rising asset values, admits Sven Edholm, a banking consultant in Stockholm's financial district. Now we're suffering one hell of a hangover as a return to sobriety. Yet scattered across Scandinavia, one detects glimmers of the fabled Nordic resilience. In the stylish environs of Stockholm's Östermalm neighborhood, patrons still flock to trendy cafes and boutiques, albeit in moderately smaller numbers. The streets remain lined with sleek Volvos and Teslas, even as electric vehicle sales have edged lower. And despite scaled-back budgets, most families still set aside funds for an annual sommarstuga, summer cottage, escape. We're adjusting, not capitulating, insists Lena Gustafsson, a civil servant. While her household has curtailed restaurant splurges, she says summer vacation plans remain intact. Maybe we'll rent a more modest cottage this year, but we won't entirely abandon our cherished traditions. Such determined expressions of Swedish resilience may ultimately portend better times ahead. As inflationary pressures subside, the Riksbank rate cuts gain traction, and economic confidence gradually revives, consumption could begin rebounding by year's end. A shallow recession seems likely, but not necessarily an extended or severe slump. Still, this loss of economic mojo, however temporary, has profound cultural implications for smug egalitarian Sweden. The idea that the prosperous yet prudent folk of this progressive Valhalla could fall victim to overindulgent economic folly is deeply unsettling. That it happened despite their cultivated reputation for moderation and sustainability is doubly chastening. We always viewed America's boom and bust volatility with deep skepticism, reflects Gunnar Eriksson, a Finnish-Swedish businessman. Didn't we pride ourselves on our steadier path? For now, that path has hit a rather imposing pothole. Yet the Swedes possess the patience, resilience, and social solidarity to negotiate the obstacle. A degree of short-term austerity may await, but any renaissance of thrift is unlikely to extinguish Sweden's deeper cultural commitments to work-life balance, environmental sustainability, and a robust social safety net. For better or worse, the distinctly Swedish model is likely to persevere, albeit with some well-earned humility. That combination of determination and equanimity in the face of adversity may prove Sweden's most enduring economic asset.